All right, so a lot of the trainings around the state, we didn't get a chance to really complete a state return, and so I wanted to take some time in this video to review the process for state returns and maybe some of the little unique things about a state return. So let's start off. Once you do a federal return, and so this is the Blackburn return right here that we've completed, and let's just imagine that this 8879 is green because I've got a few red fields that I'm still trying to tease out why it's not green, but let's assume it's green. If we look at the Missouri return, there's really not that many options. There's some at the top, especially here if we're filing an amended return, and even here, most of these are calculated. So the computer knows our age. It knows if we're blind because we told it that on the main information sheet. Same thing with 100% disabled. It comes from the main information sheet. There is a non-obligated spouse section. So that's a lot like injured spouse, but just the Missouri version. And then if you're a non-resident athlete, there's a box there. I've never had an athlete actually come to a Vitus site, but I'm ready if they do. So the rest of the return, most of it really is calculated. This all flows through from the federal. There's some subtractions and additions that are on the Missouri A. We can talk about some of those. You can see here it's important why we list things as taxpayer and as spouse, because Missouri will actually break out the percentages and then take some deductions from the total and then break it out again in income here at the bottom. Filing status flows through straight from the main information sheet. If you're married filing separate, you've got to choose here. And for most cases, that's married separate 2100. That's a choice. If you have a dependent who's over 65 and you do not receive Medicaid or state funding, you can take an additional $1,000 off here. Actually, new this year, if you have a stillborn child, you can actually check this box and it'll bump the number of dependents. So we've got one here for Carter if there was a stillborn child, because we know a stillborn child will not get a social security number. Why, thank you, Google. That's interesting. A stillborn child will not get a social security number because it was never considered to have ever lived. Missouri has a law, though, where it will give another exemption for that child if you check this box. There's a place here to put in the long-term care insurance deduction, but really that's really the only places, and I can't say I ever check many of these boxes because we just don't have a lot of reason to. On the Missouri 1040 page 2, it's the same story. Here's your income percentages from the front page, then your taxes calculated, and if you moved here from another state and you have income from that other state, what you'll see is this percentage here will often be less than 100%, because let's say you made half your income in Missouri and half in that other state before you moved. Let's say you moved in June or so. This will then be 50%. So what Missouri does is they tax you on your entire income, and then they look at the percentage of your income made in Missouri and then multiply that by the tax. That way they do actually capture a little bit more tax than if they just taxed you on your Missouri income. So works out a little bit better for Missouri in that case. So we're taxed on the taxpayer and the spouse, and then those two are added together here for a total tax. This is, well, we'll talk about that in a second, but there's a place here. If you, let's say, live in Missouri but work in Illinois, Illinois will tax you on your income made in Illinois, but Missouri will give you a credit for the taxes you paid to Illinois or any other state. So there's a form, this MoCR, that you can link to and fill it out. And we'll talk about that shortly. There's really not that many payments or credits. So really, Missouri tax withheld will be the main one. And then the property tax credit will flow down here on line 38, property tax credit from MoPTS. This is how we do an amended return. We would actually use this section. You probably won't ever do an amended return, so don't worry about it. And then you can, if you have a refund, it'll show here. You can designate your refund to go into different funds, or you can just get your refund straight. If you owe, you're going to see here an underpayment and then a total amount due, and it'll be nifty and it'll tell you when it was due. So that's kind of a Missouri 1040 page 1 and 2. Very simple, just like a federal. A lot of it is calculated straight from the federal. There's really not much we need to do. Do you want to electronically file this return? This will be defaulted to yes. And new this year, they've actually moved the direct deposit information to the bottom of the 1040 page 2. So it's nice. If someone is getting a federal refund and there's a state refund, you can check this box, and the routing and account number from the federal return will flow through to the state return. You don't have to type it in again. If you want your state refund deposited into a different account, or there isn't a federal refund, then this box won't work. And so you'll have to check this box, and that'll actually bring up the routing and account number read here. So if you have a federal refund and you want your state refund to go into the same account, check the top box. If you aren't getting a federal refund, or you want that state refund to go into a different account, you can check this box. Or if you really like mail, and I really do personally, I like getting mail, you can check the bottom box, and the state of Missouri will just mail you a check. There is no option for debit card here. They did that a few years ago, and it just, I don't think it was worth it, so they removed that option. So, and that's pretty much a Missouri 1040 page 1 and page 2. So what I want to do is kind of go over some of the places that we need to be aware of on the federal return as we enter information, and then talk specifically about the Missouri information. So probably the most common item you will see is someone who comes in with a public pension. And so that's a pension that is from the federal government, the state government, or a local municipal government. Could be a school district, could be a public works worker, anybody who works for a government agency and has a government pension. So you might see 1099-Rs with a payer, not Essex Bank, but you may see a payer of Office of Personnel Management. You'll see that for a lot of federal workers. Or you'll see Moser's, Missouri State Employee Retirement System, or PESER's, Public School Employee Retirement System, or you'll actually see University of Missouri for the University of Missouri pension system. When in doubt, just ask the person, hey, did you work for a government agency, and is this your pension from that government agency? And if they say yes, well, we can scroll down, and you'll see this nice little help box here. We can actually check box 1. And box 1 tells the software that, oh, this is a public pension, and for Missouri, you're actually not going to pay tax on that up to a certain amount. It can be a huge benefit. I've seen people who, they go from owing several hundreds of dollars to getting all of that money back in a refund. So important to check this box if the 1099-R is from or is from a government organization, and it's for that pension, government pension, defined benefit pension. So that's box 1. Box 2 is for the military. So if you see someone come in and you think it looks like a military pension, you just check box 2, and that will shuffle that pension amount into the military exemption. And box 3 actually does nothing for Missouri, so no need to ever check box 3. So when we do check one of these boxes, and I'll go ahead and check this box 1, on our Missouri page 2, I won't work on that one. Let's see if it'll work on this one. There we go. The other one's a Roth IRA. I basically made the Hickory pension a public pension. You can see here that we've got this amount flowing through, and it looks like there's a public pension, and it's basically removing that from their income, so they won't pay tax on that. Now, you don't want to do this for every pension. It's just for the public pension, so I'm going to go back to, for illustration purposes, I made Hickory a public pension. We're going to take it off because it's really not. But it will, all you have to do is check that box and it'll actually flow through and fill in all these boxes for the public pension calculation. Military is actually at the bottom of this page, and so there's a military pension calculation here. And of course, also on this page is a Social Security disability calculation that removes some of your Social Security or Social Security disability from taxation. So the computer will automatically do that. You have to signal if it is a public pension or if it is a military pension. Okay, so that's all you need to know on a 1099-R. We've talked about health premiums on a Schedule A, and we talked about they flow through here. This 1259 is actually his Medicare premiums, and we can actually enter those. We can enter those here. So if someone had insurance premiums in addition to their Medicare, like let's say they had a Medicare supplement, or they're just paying out of pocket for their insurance, not if they have employer-provided insurance and they're paying pre-tax. That's already pre-tax. You can't pay pre-tax and then deduct it again. That's not allowed. But if you're paying insurance out of pocket or it's not pre-tax, you can actually deduct it here on your Schedule A. Now we know, though, on a Schedule A, we've got this 10% floor we have to meet, or in this case, because Elliot's over 65, it's 7.5%. So it's not really helpful. But in Missouri, it can be. So even if you know it's not going to matter on our Schedule A detail, which we can get to by linking, or we can just go to it. I'll go ahead and link here my existing Schedule A detail. At the top of this, I can put in my insurance premiums, and they will flow through to the Missouri. And so, again, you just put it in, and the computer will make it flow. The Qualified Health Insurance Premiums Worksheet, they'll pull in the health insurance premiums, run some calculations, and then come up with what is deductible. And if we go to the Missouri A, the first part is additions, and the second part is subtractions. And you can see there's that Qualified Health Insurance Premiums. So if you just put in that health insurance premiums that you pay out of pocket, that you don't get a tax deduction, or that's not pre-tax, it'll flow through to the right place. One other item is that individuals will come in and they will have last year itemized deductions and receive a state or local tax refund. Now, that means that when they itemized, they use the withholding off of their W-2s generally. And then they get a refund because they had more withheld than they actually owed in state tax. Now, if you think about that, you could actually get a refund of your state tax that you never paid federal tax on. So the government just assumes when you paid Missouri, that was your Missouri state tax. And because we know our Missouri taxes are calculated after the federal. And so you could have a whole huge amount of money withheld for state tax, and then you would deduct that on your federal return. And that would allow you to avoid taxation on your state refunds. The government knows about this and says, well, we're just going to tax you on it next year. So if you itemized deductions and received a state or local tax refund, then you've got to answer yes here. And that will bring up this field as red, and we can link from this field to a new state tax refund. And we simply click into the state tax refund. If somebody came in last year and saw us, then this will all fill in. It'll be very nice. Otherwise, we have to work off of their 2014 return. So I could put in, maybe they got a $1,200 state refund. I'd have to put in the income tax, if they what they deducted for income tax, if they deducted anything for sales tax. Usually you only get to choose one of those, so usually people just have one number. And then we just go through and fill out the form. It wants to know what their filing status is, and generally what their taxable income was, and then it will calculate out how much of their refund is taxable. So really nice if they came in last year, because this will carry forward, which is beautiful. So or you can go to the summary page from last year, and if it pulled forward, then you can often pull the information like here's taxable income, you can just pull it right off of this form. So, all right. Let's talk about some of the Missouri-specific items. And these are fairly specific. Not everybody's going to have these. And my goal here is to kind of make you spark this in your mind. And so feel free to take notes. Maybe the last page in your binder or somewhere on like a state page. I just want to try and put these down so it can spark a little bit of your memory. Number 11 on the Missouri A, page 1. And the Missouri A, page 1 is broken into two things, additions and subtractions. And there is a place where you can put money into a qualified 529 plan. And so you can actually put in the amounts here and here. You can break them down per spouse or just the taxpayer. And that will give you a deduction on your state return. There is no federal deduction for contributing to a 529 plan. Although if you take the money out and use it for qualified education expenses, then you will not pay taxes on that amount. So that's the benefit. We talked about the MoCR, but let's go back to that. So I'm going to jump up to my 1040 page 2, and right beneath the tax line there is the resident credit from MoCR. And so this is again when you have somebody working in, let's say, Kansas, and they live in Missouri. Missouri will actually give you a credit for the taxes you pay to Kansas because you worked there. So we can click the little box. Come on, little triangle. Icon. There is a new MoCR. And so we put in the state. Let's say it's Kansas. It wants to know the wages in Kansas. That will come straight from the W-2. What were the wages made in Kansas? Let's put in 10,000. And notice it's going to pull in your Missouri income. It's going to look at it and say, okay, 46% of your income is taxed by the other state. How much in tax did you pay to that other state? And so we could say, well, I paid $150. Well, it's going to look at your Missouri tax, and it's broken down into taxpayer and spouse. $144 is what the taxpayer has, and so 46% of the income is made in Kansas, and so it's going to say you can only get up to 46% of your Missouri tax paid by your Kansas tax. So this is, this would come, this number, this would be the income tax you paid to the other state. That is your income tax obligation. This is not the income tax on your W-2 that you had withheld. This is what you paid to that other state. So we would put in whatever they paid to that other state on their state income tax return, and then we would get a credit, which is either going to be a maximum of whatever the percentage is of our Missouri return, or less. So if I put, let's say I paid only $30 to Kansas, then I'm only going to get 30 back. So basically you can't make money by paying taxes to another state. There's no way to make money. So, and then if we go back to our 1040 page 2, that credit is flowing through. So again, let me go through that one more time. You worked in Kansas, lived in Missouri. You made $10,000 in wages in Kansas. Missouri says, okay, that's $10,000 of your income. That's about 46%. 46% of your Missouri tax is $66. The best you're going to get is $66. If you paid less than $66 in tax to the other state, then the max you're going to get is what you paid in tax. If you paid more than $66, the max you're going to get is still just $66. And we do that for you and the spouse. So maybe you live in Columbia and you commute to Kansas, and your spouse commutes to Illinois. We could do that. That would be complicated, but we could do that. So, all right, we're going to delete that form because it's cluttering things a little bit. The last other major item is the MoPTS, and generally it will make itself red down here if the software determines that you're eligible. And so the eligibility for MoPTS is actually on the form here. It's very nice. If you're 65 years of age or older, you could be eligible. If you're 100% disabled, you could be eligible. And both of these work. If you're a 100% disabled veteran, we would check that box. And you could be 60 years of age or older and receiving surviving spouse benefits. Fairly rare, but that is possible. So Elliot is over 65, so the computer is already saying, oh, there we go, right there. But they make too much income, as you'll see here in a second. So we would check the items we actually paid in 2015. So county or city real estate taxes or rent. And so either we own the property and we pay the real estate taxes, or we pay rent on it. If you do neither, I think if you check here, that shuts the whole thing down. It doesn't really do anything. If we're married, we need to choose married filing combined or married living separate. Generally, it's going to be married filing combined. And then we have our income flowing through on lines 1, 2, 3, and etc. So the only line we really need to be concerned about is line 6. Line 6 is what we see a lot. If someone is receiving child support or SSI or other public assistance, we would enter that amount here. And then it flows through into total household income. So generally, we don't put SSI or child support anywhere else on our tax return. It doesn't show up anywhere, but we do enter it here for the Missouri property tax credit calculations. As we kind of scroll down a little bit, we can check the box that applies. So if you're single or married living separate, then this box is going to be checked and you're going to get 0. Since it's married filing joint, we actually get to add in a $2,000 deduction or a $4,000 deduction, depending if you rented or if you owned. So we would have to choose that. Net household income. I really don't like the way this is written, and I see this happen all the time. So let me walk through it, and hopefully it'll become clear. Ignore these lines. See these lines? If your total is greater than 27,500, stop, no credit is allowed. Just ignore that. The computer is very good at looking at a number and saying, this number is less than 27,500, or it's more than 27,500. So I don't even know why this is here, other than it is trying to mirror the paper return, but the paper form. But just ignore it. The big question is, if you rented or did not occupy your home for the entire year, check that box. If you owned and occupied your home for the entire year, check that box. So let's say that you had somebody who owned their home, but they moved into a nursing home, and they didn't occupy their home for the entire year, then they would check that box. If you rented, check that box. If you owned and occupied your home for the entire year, now obviously temporary absences are different, but if you moved out of your home, then you didn't occupy your home for the entire year. So ignore the numbers. The numbers are kind of pointless on a computer where the computer does numbers really well. We're looking at this or this, depending if you rented or if you didn't occupy your home for the entire year. Or if you did, check that box. So, fairly simple. Depending on what you check at the top, let's check real estate taxes. If you check real estate taxes, then this field is going to be red. And we can link from this field to a Mo RET. And this is simply where we put in our real estate taxes, and they'll flow on through. So we'd put in the county code, so that would be Boone County, the total real estate tax you paid, and that's about it. If there's a mobile home, you actually pay personal property tax on that. And so we could put in the personal property tax and then the percentage of the tax that actually goes to that mobile home. Okay. If you share the residence with people other than your spouse or your children under age 18, then you've got to check these boxes, and that actually lowers the credit because you're not fully using the home. There's someone else there in the home with you. So that's the property tax credit. Now, if we chose rent, and you could choose both here. You could have, let's say you were paying personal property taxes on a mobile home, and then you rented the pad where the mobile home sat. You could have both. but we're going to just say rent. There is another line. If you owned your home, this field was red, and if you rented your home, this field is red. And so we're going to click here and link to a Mo CRP. And this is, you're just certifying how much rent was actually paid. Simple questions. Are you related to your landlord? If you are, then you're going to have to explain, well, how are you related to your landlord? You can put in a physical address of the rental unit, where the person actually lived, all that information, the landlord's name. It's actually asking for the landlord's last 4 digits of social or their FEIN. That's new. It's always been on the paper return, but it's not actually been on the TaxWise portion. There's a place where we can enter the landlord's address and the apartment number of the rental unit that the landlord is living in. And then the landlord's phone number. And then the rental period during the year. So when did you start renting to when did you actually leave that rental? And some people come in and they'll have 2 or 3 of these. Maybe they moved halfway through the year, or they moved and they had 3 very short leases. That's fine. You just fill out 3 of these. We have to check what it is. Most of the time it's an apartment. Could be a mobile home. These others that are a little bit less, this is mainly for the actual rent. So if you're receiving food or things other than actual rent, then you're going to get less. And if you actually share it, then you have to check the boxes because you're not living solely there. You're sharing it with other people. So we could just choose the apartment. We're going to get 100% for that. We put in our rent paid and it'll calculate all the way down. So once you complete that, the number will flow through. The rent will flow through. You can only take 20% of the rent, and then the total will kind of flow through to here, and then you get the property tax credit. If you've entered these incorrectly, or you've done something wrong, what you'll find is the number will appear here on line 13, but it won't appear here on 14. And so that's a signal to you to kind of go back to the return and say, is there something I missed? Did I not do something? And in fact, 10A or B is a huge culprit of that. It's very easy to skip these because they're so stupidly confusing that it's easy to skip or miss or just not understand. And so if you come back and check one of these 2, you have to check one of them. Usually it'll fix it and it'll flow through. So that is the Missouri property tax credit. There are maybe some smaller other Missouri items, but it's unlikely that you're going to see them. In general, if there's a question or if you are running into a roadblock or a client is saying, well, I got this last year, give me a call. I'm willing to kind of work with you on that and figure it out. We can't know everything, but we can know a lot of things. So hope you found this video useful, and let me know if I need to cover something more in depth or if you feel like there should be some other detail we should cover. I appreciate your watching the video all the way through.